Back on Morning Mover, shares of Chipotle fell to new 52-week lows yesterday, now down 20% so far in 2025. Stifel cut its price target on shares to 65 from 68, but still bullish. It kept a buy rating. The firm continues to expect the recently launched Chipotle Honey Chick to be a strong product, but sees a handful of factors contributing to a difficult lap over the remainder of Q1, which results in softer comp performance than projected. That's their expectation. With that, time now for Options Corner. Joining us to take a deeper look at Chipotle, we've got the Duke of Data himself, Rick Ducat, lead market technician. All right, looks like we've seen some weakness this year in Chipotle. What are the trends telling you, Rick?
Yes, it's been a rough year for this one. We can see that we had a bit of a rally here, an upward sloping channel that gave way to a very similar, similar slope, downward sloping channel that we can see here. We crossed below our moving averages. Yesterday, we dipped below our previous double bottom lows at this green line near about 48. We are recovering a little bit, it seems like, in this pre-market session, but not too much change from yesterday so far. RSI also trending downward here, so far staying out of that oversold area, but that would be an area to keep on the lookout for, Diane.
What about any recent notable options activity? I know a lot recently. You've looked at March 21st. Is that similar here?
So this one is actually a little interesting because the June 20th quarterlies are the most active in terms of open interest, about 336,000 contracts total. But you're right, I did think it was more important in this case to focus on the upcoming quad witching expiration on Friday here. So you can see the top strikes here, but in general, the calls, the heavy activities between 53 to 73, on the put side between more like 46 to 56 here. So, and when we look at the market for yesterday, the biggest dollar amount trade yesterday was selling puts in those June 20th quarterly expirations, about $645,000 credit received for those 2,500 short 46 puts. So it looked like an opening trade because the open interest went up relative to the previous number here. Break even will be roughly 9% or so to the downside on this neutral to bullish play of selling those puts.
Okay, so now what's your strategy from here, Rick? How would you structure an example trade?
Sure. If we could pull up our Thinkorswim charts again, you might remember that I had mentioned we talked about that 48 level here. So if we were to look a little bit at the upside, notice as well that 52 or so is our 21-day exponential moving average. So if we look at our volume profile and our standard deviation channel studies, we can see that that 52 area lines up with our -1 standard deviation channel. To the downside, if we were to move lower, 44 stands out to me. It's our -3 channel, then 40 is our -4 channel. And these are referring to standard deviations away from our line right here. This is our linear regression line, our line of best fit. So what we're doing is we're taking our fair value, we're extrapolating standard deviations to find relatively extreme points to the downside and upside here. So remember now, we have our 5-year chart, we have 44 coming into play again here. So the 44 level seems important. Beyond that, 40 seems to be where the volume starts to pick up roughly again. So the trading question, +1 June 20th 50 strike call and -1 June 20th 40 strike put at a $2 net debit here. So you're selling a put using the credit to buy a call. The break even is that 52 level that we discussed earlier. It starts to lose money at that 40 level, but we have this nice big cushion that's almost completely in that expected move area here. So this one will be looking for about a 8.3% move to the upside here to break even. But the projected move, if we could pull up our next toss chart here, you can see that the projected move based on our probability of expiring cone study is much greater here. It comes in near 58.17. So that would be about a 21.5% move here. So green is where we'd start to make profit. Red is where we would start to lose money on that put.
All right, watch out. Selling a put using a credit to buy a call. It's an example trade for Chipotle. Shares a little bit higher in the pre-market. Thanks a ton for that example trade there, Rick.